Good morning, everyone, and welcome to our first web conference of the week. Before we start, I just want to say that your microphones are muted, but you can ask questions by using the Q&A function, which you'll see at the bottom of your screen. And I'll put these questions to the manager at the end of the session, so please do ask away. Just be aware that there are over 800 people altogether attending this event this week, so don't be disappointed if we don't ask your question in the session. They'll all be shared with the manager after the show, and we'll do our best to make sure that we get answers back to everyone. For our first session today, we're going to be joined by the manager of JPMorgan Japan Small Cap Growth and Income Trust. The trust has a dividend policy which has now been in place for over 2 years, aiming to deliver 4% of the average NAV over each preceding financial year, making it a very attractive way to diversify equity income exposure away from the usual blue chip UK stocks that tend to serve this purpose in most investors' portfolios in this country. After starting last year under the growing cloud of what was then an emerging pandemic, the trust had a very strong run from the end of March until the end of 2020. Their performance has come off a little in recent months as value stocks have taken centre stage. We'll be publishing a note on the trust shortly to bring our coverage up to date on this front. In the meantime, I'm very pleased to introduce you to Eiji Saito. Eiji.
Hi, good morning. Thank you for joining the webinar today. We hope you are all well and staying safe. My name is Eiji Saito, a portfolio manager of JPMorgan Japan Small Cap Growth and Income Trust. Today, I'd like to talk about two topics. Firstly, what is JPMorgan Japan Small Cap Growth and Income Trust? And secondly, investment opportunities in Japan. Why invest in Japan and why invest in Japanese smaller companies? In the first slide, I'd like to explain our investment policy and dividend policy. Our job is to meet your saving needs, and we have very unique investment and dividend policies to meet your needs. As a portfolio manager, we construct best idea portfolio in Japanese smaller companies to maximize capital growth. We do not want to invest in high dividend yield stocks, which tend to be low growth. We acknowledge that many retail investors like to get dividend income, and that the company pays dividend equal to 1% of the company's net asset value quarterly. Growth and income. This is our unique policies. And I would like to touch on our team. The most notable thing about the team is that it is physically based in Tokyo. We live in Tokyo. It is increasingly unusual for our global asset managers to have a dedicated investment team in Japan. We, JPMorgan Asset Management, has continued to have commitment to Japanese equity investment over 50 years, since we started to invest in Japanese equity in 1969. We have over 20 people based in Tokyo, and the team has conducted over 4,000 company visits every year. Our strength is not only the number of investment professionals on the ground, but also diversity of background and diversity of thought. We have both growth and value managers in the team, and we come from 8 different national origins, including Japan, UK, US, Germany, Australia, China, Russia, and India. We believe that the most diverse and inclusive team will provide the greatest value to client. This is the executive summary slide of the company. We have the strong and diverse team on the ground. We like to invest in high-quality businesses that compound sustainably over the long term. We capitalize on Japan's structural changes and focus on undiscovered growth opportunities. The company has delivered an annualized excess return of around 5% per annum. over 5 to 10 years. JPMorgan Japan Small Cap Growth and Income is our best idea portfolio, focusing on smaller companies in Japan. The portfolio has distinct style signature of quality and growth. We look for companies with, firstly, structurally good outlook, and secondly, strong cash flow, and thirdly, strong balance sheet. We selectively buy and hold companies with those characteristics. Please look at the left table. The portfolio has higher return on equity and higher 5-year expected growth rate compared to. And please look at the right chart. This shows what we call strategic classification. JPMorgan Asset Management define strategic classification in order to understand each company's quality of business, quality of management, and quality of earnings. We classify high-quality companies as premium or quality, and classify average companies or cyclical companies, or companies which have only short track records as trading. As you can see, 96% stocks are classified as trading in the benchmark, but premium and quality companies account for over 40% in the portfolio. This shows sector positions. Again, the portfolio is the best idea fund, and we aim to maximize excess return by bottom-up stock selections. So this slide shows that we can find high-quality smaller companies in sectors like software and services, media and entertainment, semiconductors, and technology hardwares. We have been investing in a lot of interesting, exciting companies which benefit from structural changes. Underweighted sectors include matured sectors like real estate, banks, and food. Companies in matured sectors are suffering from declining demand and tougher competitions, and we tend to underweight those sectors. This slide shows the latest portfolio positions. Taiyo Yuden is a technology hardware company which manufactures capacitor, and Taiyo Yuden will benefit from 5G in telecommunication and electric vehicle. Miura manufactures small boiler, and Miura helps reducing CO2 emissions in Japan and China. We are investing in a lot of high-quality, high-growth companies, and like to explain these stocks in the second part of my presentation. This shows the latest performance as of the end of January. The Japanese stock market has been negatively affected by COVID-19 pandemic, and the company's benchmark, the Standard & Poor's Japan Small Cap Index, went up by only 3% over 1 year. The company outperformed the benchmark by 27% over 1 year, delivering a positive return of 30%. Also, the company's performance is ahead of the benchmark by around 9% per annum over 3 years, and by around 5% per annum over 5 and 10 years. Why we could achieve strong excess return amid COVID-19. Please look at the left chart. Sectors that contributed most positively include capital goods, media and entertainment, software and services, and commercial and professional services. Stocks in software and services, which include many internet software service companies, advanced a lot amid COVID-19 pandemic. And stock selection had worked very well in sectors like capital goods, media and entertainment, commercial and professional services, which also include many internet service companies and e-commerce companies. Please look at the right table. Stocks that contributed most positively include Bengoshi.com, which is in media and entertainment sector, and it provides cloud-based digital contract service. And Base, which is in software and service sector, and it provides software for e-commerce. And Grace Technology, which is in commercial and professional service sector, and it provides cloud-based manual management system. These companies benefit from stronger demand for their services thanks to digitalization amid COVID-19. Negative contributors include Tosho, which operates fitness gym, sports gym in Japan, and Mitsubishi UFJ Lease, a well-managed leasing company. Domestic industries, including fitness gym and leasing, have been suffering from COVID-19 pandemic. But even though share prices of these companies went down by around 30% last year, we believe that there are no changes in our investment cases, and we like to keep holding these stocks. From here is the second part of today's presentation. I would like to talk about investment opportunities in Japan. Why invest in Japan? And why invest in Japanese smaller companies? There are two major changes taking place in Japan right now. These are digitalization and decarbonization. Digitalization is accelerating in Japan. I'd like to explain 4 areas of digitalization. The first area is e-commerce, the digitalization of shopping. E-commerce and cashless payment are advancing in Japan amid COVID-19 pandemic. Please see stock highlights in e-commerce. We invest in a company called Base. Base provides e-commerce software, especially for smaller companies and individuals. Base allows anyone to easily and quickly set up an online store in just a few hours with no setup fee or recurring monthly fee. In Japan, e-commerce market has been growing strongly, and major e-commerce platform providers such as Amazon and Rakuten have high market share in e-commerce market. But Base is growing rapidly as its service enables small store operators and individuals to make their own e-commerce shop and sell their own products and services online. We also invest in a company called Yapli. Yapli provides no-code mobile app development platform. Usually, you need to hire software engineers if you want to develop your own mobile app. However, using Yapli, retailers can start their own mobile app e-commerce business without any engineer in their team. Yapli provides effective interface for mobile e-commerce application with solutions like coupon, push notification, point card, and GPS store navigation. Both Base and Yapli provide software platform to start e-commerce business. And we also invest in a company called Plaid. Plaid provides software platform to increase e-commerce sales. You can start e-commerce business by using Base and Yapli, but once you opened online e-commerce stores, you like to increase e-commerce sales. Plaid offers customer experience software platform, and using Plaid services, retailers can visualize customers who visit their own online stores. And you can find out what visitors are truly looking for. And you can provide meaningful information and product that match each of visitors' needs. Plaid can analyze and visualize each client and help taking appropriate action to maximize e-commerce sales. Base, Yapli, and Plaid, you can see that interesting smaller companies are playing important roles in e-commerce market in Japan. The second area in digitalization is cloud infrastructure, cloud service. Cloud is the digitalization of business operations. Bengoshi.com offers Cloud Sign, a cloud-based service for digital contract. Cloud Sign is pioneer in Japan. You may use DocuSign in UK, but Cloud Sign is a pioneer in Japan. And Cloud Sign targets to change the Hanko culture. Hanko is a traditional physical stamps that can act as your signature on document. The biggest bottleneck in improving labor productivity amid COVID-19 is Hanko culture. As long as we need Hanko in contract, someone has to go to the office to fill in paper document. Now more and more Japanese companies are changing their old-fashioned business operations by introducing new cloud software services like Cloud Sign. We also invest in a company called Money Forward. Money Forward provides a cloud-based accounting software that simplifies complex account settlement. Money Forward also provides many other cloud-based software services, including payroll calculation software, expense management software, and attendance management software. Penetration of cloud-based software in small and medium-sized enterprises is still very low in Japan, and the Money Forward service has plenty rooms to grow. The third company in cloud infrastructure area is Henge. Henge is the top player in identity and access management service in Japan. It provides single sign-on system to centralize authentication to various internet software services with main functions of ID federation and access control. Let's imagine that we use cloud-based digital contract service provided by Bengoshi.com. And we also use cloud-based accounting software provided by Money Forward. If we use 20 cloud-based software services, we need 20 ID and password. Identity and access management service solves this inconvenience By providing single sign-on system, we can access all cloud services through one ID and password with Enge. We can find many Japanese smaller companies which are driving cloud software market. The third area is online medical platform, the digitalization of medical sector. Medley provides the largest telemedicine platform in Japan. Their telemedicine system has been well received by patients amid COVID-19, and the increasing numbers of medical clinics and patients have been using their telemedicine system. And we also invest in a company called Azuwan. Azuwan provides e-commerce service specialized in scientific instrument and hospital product. E-commerce penetration in medical sector has been increasing strongly amid COVID-19. And these companies have been benefiting from digitalization of medical sector. Public sector, including medical sectors, are very conservative in nature, but digitalization in medical sector or other public sector has been accelerating amid COVID-19. The last area, the fourth area, is digital transformation. It is the digitalization of industry. There are many old-fashioned industries in Japan, but many Japanese smaller companies are focusing on the digitalization of industry. We invest in a company called Infomart. Infomart is driving digitalization in food and restaurant industry. Japanese companies like to use paper documents, and restaurant operators still use fax in ordering food ingredient. However, even in food and restaurant industry, Japanese companies are changing old-fashioned business cultures. Infomart is the #1 player in providing an e-commerce platform for the food industry. Transactions within the food industry has been highly inefficient with manual paperwork and facsimiles for ordering process. But Infomart's core e-commerce platform, called Food Infomart, is becoming the de facto standard for food wholesalers and restaurant operators. Infomart is leading digitalization in food industry, and Raxo, the second company in digital transformation, Raxo, focusing on digital transformation in printing industry, advertising industry, and logistics industry. For example, Raxo provides a truck sharing online platform, truck sharing, which allows you to book package delivery service quickly and easily from your PC and smartphone. Productivities are very low in old-fashioned industries like food industry and logistics industry. But many Japanese smaller companies focus on digital transformation in those old-fashioned industries to improve productivity. The first major investment opportunity is digitalization. The second major investment opportunity is decarbonization. Climate change is becoming the social issue globally, and Japan is aiming to achieve carbon neutral by 2050. Japanese companies have advanced technologies, and we expect those technologies will contribute to decarbonization going forward. The first area in decarbonization is environmental friendly products and services. In Japan, there are many products and services that contribute to reducing environmental impact. Miura is a gas boiler manufacturer which is making a significant contribution to reducing CO2 emission by encouraging a structural shift from coal to gas in China. Recycling and reuse is also a major theme in reducing CO2 emissions. Mercari provides selling app similar service to eBay, and it also contributes to build a sustainable economy by encouraging recycle and reuse. Second area is electric vehicle. Electric vehicle will become more and more popular, and technologies of Japanese manufacturers will be needed for electric vehicle. Taiyo Yuden and Iriso Electronics manufactures electric parts like capacitor and connector, which are used in electric vehicles. Also, the number of motors used in a car will increase dramatically thanks to electric vehicle. And Nittoku is one of a few companies which provide automatic motor coil winding machines. Third area is renewable energy. Renewable energy is also very important in decarbonization. Renova operates renewable energy power plants, including solar, biomass, onshore and offshore wind power plant. Japan aims to cut greenhouse gases to net zero by 2050. To reach that goal, renewable energy generation, including both solar and wind power, will have to grow strongly. Renova has strong experiences and knowledges in operating renewable energy plant. We believe that digitalization and decarbonization are two major structural changes, and we like to invest in companies which are leading these structural changes. And from here, I'd like to talk about why we believe that Japan is a good place for active investors like us. This chart shows percentage of companies with less than 3 analyst coverage. In Japan, 71% companies are covered by less than 3 analysts. Small cap market is not efficient, especially in Japan, because sell-side analysts only cover large companies. Japan is an under-researched market. It is also important to highlight that we see no shortage of exciting investment opportunities. Small cap market in Japan offers broad investment opportunities. This chart shows the number of IPOs or the number of newly listed companies. In Japan, around 100 companies are newly listed every year, and almost all newly listed companies are smaller companies. Investment opportunities in smaller companies are increasing every year. And this slide is about balance sheet and corporate governance. In Japan, safety and security is highly valued. However, we Japanese might be too conservative. Japanese companies have the strongest balance sheet among developed countries. Challenge for Japanese companies is how to invest this cash and how to return to shareholders. Since Abenomics in 2012, Japan has been working on corporate governance reforms. We Japanese will continue to accelerate corporate governance reforms by revising the Corporate Governance Code and the corporate law. Japan has many social issues that need to be resolved, such as the declining and aging population, weak economy, climate change, and carbon neutral. We need to revitalize Japanese economy by investing capital to innovations. Corporate governance reforms are still in progress, but I believe that we can expect a sustained improvement in the capital efficiency of Japanese companies, and we are encouraging this improvement through our engagement with investee companies. This is the last slide. JPMorgan Japan Small Cap Growth and Income is the best idea portfolio investing in Japanese smaller companies. We have the strong and diverse team on the ground. We have achieved strong excess return by investing in quality growth companies. We'd like to keep investing in Japanese smaller companies, which are driving changes like digitalization and decarbonization in Japan. That concludes my prepared remarks, and I'd like to hand it over to Pascal for question and answers. Thank you very much.
Hello, everyone. Yeah, sorry, my camera was just being slow to turn on then. Yeah, so we've got plenty of questions. Hopefully you can hear me clearly. So first one is, to what extent has the release of capital from Japanese companies, which was dominating the news before COVID took off, this stuff encouraged by Abenomics and the whole, taking cash off the books, has that been derailed by the pandemic, or does that continue to be a thing which plays a major part in Japan?
I strongly believe that Japanese companies have too much cash on balance sheet. And yes, actually, last year, many Japanese companies reduced a dividend payment in order to security and safety amid COVID-19. But we are meeting many companies which are trying to increase dividend or trying to improve return on equity by increasing dividend and by buying back shares. So actually last year it was a tough year for us because we cannot ask for increasing payment. But going forward, we strongly believe that corporate governance reform will continue, and most companies, more and more Japanese companies will increase dividend or increase capex in order to increase capital efficiency next 5 to 10 years.
Thank you. How does the increasing acrimony between China and the rest of the world affect Japan, and how does that play? How does that play out in your portfolio? Are you reacting to it in any way?
Yes, we are in Asia. Japan is in Asia, and China is a very important country for us. And firstly, we own a lot of technology hardware companies and semiconductor companies. And those companies' earnings and share prices tend to be very cyclical, and US and China trade war will negatively affect those companies' earnings and share price. But we strongly believe that Japanese companies' technology, advanced technologies, will be needed by both US and China. So we like to invest in technology hardware companies whose demand will continue to increase going forward, even though they tend to be very cyclical in terms of earnings and share price. And secondly, we also like to invest in consumer product companies, which will expand their business areas into China or other Asian countries. It's very important for Japanese companies to expand overseas business. And we are in Asia, and it's easier for Japanese companies to expand into Asian countries, not in US, not in Europe, but it's more easier for Japanese companies to expand businesses into Asian countries, including China. So we have high exposure to technology hardware companies, and we also have high exposure to consumer goods companies, also which will expand businesses in China and other Asian countries. But in the short term, if we see US-China trade conflict. In the short term, they might be negatively affected by the trade war. But over the long term, we believe that those companies will continue to grow sustainably. Thanks.
Thank you. So one more kind of macro question, and we'll move on to more fund-specific stuff. How much progress is being made in enabling, I think something people have read about is the female participation in the workforce in Japan is relatively low compared to elsewhere in the world. And that's something which has been being addressed. Has that continued? And what part do ESG matters like this play in your process when it comes to choosing companies in which to invest?
Thanks. I think that is one of the most important questions for Japanese companies. The biggest issue in Japanese companies is management. The diversity of management team is very poor in Japan. And we strongly engage with investee companies to increase diversity in both employee level and management level. You can see that most Japanese companies have only male management team. And we like to vote against those companies which only have male management team. So yes, diversity in Japanese companies is very important for us. And we like to engage with investee companies to increase diversity in Japanese economy and Japanese companies. And it has just started, and most companies are still very poor in terms of diversity. But more and more company management acknowledge that they have to change. They cannot ignore diversity, and they cannot ignore ESG, because we often communicate with investee companies, and we talk about the importance of ESG, and we talk about the diversity in management. And as I said in the team slide, we already construct a diverse team in Japan. So we believe that we can construct diverse team even in Japan, even in Tokyo. That is our message to investee companies, and they are going to change their management diversity of their management. And I would like to see that changes will continue over the next 2 to 3 years. So you can see that diversity of management will improve over the next 3 years. Thanks.
Thank you. So moving on to these are very much more fund specific and about the way the fund works. Simple one to start with. Do you grow your winners, or is there a certain size at which you have to, or which you cut off and say that's big enough now, I'm just going to sell out?
Thanks. So JPMorgan Japan Small Cap Growth and Income. It is the best idea portfolio investing in smaller companies. But what is smaller companies? And in this slide 4, you can see that the 28% in portfolios, the market cap is over 5 billion US. So we invest in mid-cap stocks. Why? It is very important for us to buy and hold as long as possible. We would like to maximize capital growth by investing over the long term. And we don't want to sell all as long as the company continue to grow. And some small cap portfolio have to sell when the market cap is over 5 billion. But I think for us, it's better for us to hold smaller companies. And I would like to sell all if smaller companies became large companies. And you can see that we don't have exposure to companies whose market cap is over 10 billion. So simply said, I would like to invest in company whose market cap is 1 billion, 2 billion, 3 billion. And we like to invest in those companies as long as possible. And we would like to sell all. We would like to liquidate entire position in those companies when market cap became over 10 billion. One example is that we own a company called Asahi Intech. We bought Asahi Intech when market cap is 100 million US. But now its market cap is about 8 billion or 9 billion. So share price went up by 80 times or 90 times. That is what we would like to repeat. So we like to invest in smaller companies, buy and hold as long as possible, and liquidate entire position if market cap became over 10 billion. That is our investment style.
Thank you. That's a great answer. Can you tell us a little bit about the performance this year and why it has been why it's struggled since the start of the year?
Yes. As a portfolio manager, we like to outperform the benchmark every year, every quarter, every month. But it is very difficult, and we do not want to do that. Our performance tend to struggle in a value rally. We strongly believe that we can maximize long-term return by investing in high-quality, high-growth companies over the long term. And we do not want to change our portfolio in a short term. This year, many investors believe that economy will improve this year and next year post-COVID-19. And many low-quality cyclical companies outperformed a lot this year. Under those circumstances, our performance might tend to be struggle. But we believe that consistency is very important. In order to achieve long-term performance, we like to focus on high-quality, high-small companies, even though in the short term, value and low-quality stocks outperform the benchmark. So this year, we are struggling in terms of performance, but for me, it is a good opportunity to buy high-quality, high-growth companies in a value rally. So we are investing and buying a lot of interesting smaller companies this year. Thanks.
Great. We've got barely any time left, so if you could give me a very quick answer on this one, that would be great. I just thought it was worth asking because it's an interesting question. How much of the fund is, when you talk about exposure to tech, how much of that is enablers of existing tech versus disruptors who are, turning up to dominate entire sectors where they didn't exist before?
Well, actually, in Japan, we cannot find disruptors actually. Many companies try to expand their business as a team. I mean, for example, I had explained digital transformation, and Informat tried to digitalize food and restaurant industry, but they don't want to disrupt food and restaurant industry. They want to revitalize the industry. So that is their vision and mission, to revitalize entire industry or entire economy by introducing technological innovation. And I personally like to invest in those companies which will revitalize old-fashioned economy or industries or companies.
Thank you, Eiji. There are lots of questions I haven't had time to answer to ask you, so we will share those with you after this. That's all we've got time for now, I'm afraid. Our next session starts in 10 minutes with Aberdeen Standard Asia Focus. If you've registered for that already, you should have a placeholder in your diary. But if you haven't, then you can still do so. You'll find an article on the website homepage, on our website homepage, allowing you to gain access to that session. So all that remains for me to say is thank you for joining us, and thank you, Eiji, for taking the time to talk to us today.
Thank you. Thank you.
Bye-bye.
Bye-bye.